Welcome to this explainer. Today, we are unpacking the dramatic and frankly unprecedented transformation of SoftBank Group. Now, headquartered in Tokyo, SoftBank was once primarily known to most of us as a major telecom provider, but under the leadership of founder and CEO Masayoshi Son, they have completely pivoted. They have transformed into a global powerhouse, and they are betting virtually everything on artificial intelligence, semiconductors, and the future of computing. So we're going to look closely at the data, the massive investments, and the underlying financial mechanics of a company that is quite literally trying to buy the future. Okay, let's dive right into this. Here's our roadmap for today's explainer. We'll start with the 72 trillion yen giant, unpack a major surprise from Intel, and dig into their mega bet on OpenAI. From there, we'll cover their physical infrastructure build-out, how exactly they're financing this vision, and finally ask, is this a house of cards or an empire? Section 1. The 72 trillion yen giant. Let's talk about the sheer scale of this empire. I really want you to think about this number, 72.3 trillion Japanese yen. That was SoftBank's net asset value, which is essentially the total worth of all their investments minus their debt as of June 30, 2026. I've isolated this number because, honestly, the human brain kind of struggles to process wealth of this magnitude. We aren't just talking about a large corporation here. We're talking about an entity with resources that literally rival the GDP of entire nations. That gives them the sheer financial gravity to basically bend the global tech ecosystem to their will. And to put that scale into perspective in the real world, back in June 2026, SoftBank stock surged 14% in a single day. That massive surge pushed SoftBank's market value past 48 trillion yen, officially overtaking Toyota, which was sitting at roughly 46 trillion. Just think about that for a second. SoftBank dethroned Toyota, Japan's legendary, undisputed automotive giant, to become the country's most valuable company. It perfectly highlights this massive modern shift we're seeing, right? Moving away from traditional manufacturing dominance straight into the new era of tech and AI dominance. Section 2. The Intel surprise. Let's get into their Q1 2026 financial results. Okay, so there is some serious cognitive dissonance going on in these numbers. Analysts had forecasted a net profit somewhere between 120 billion and 165 billion yen, but SoftBank came in and completely smashed those expectations. They posted an actual net profit of 347.33 billion yen, which is about 2.2 billion US dollars. They nearly doubled what Wall Street expected. But wait, despite that massive beat, that profit figure actually represents an 18% decline from the exact same period a year earlier. That was driven by higher operating costs, even though their overall revenue was actually up 10.9% to 2.20 trillion yen. So the big question becomes, how on earth do you double analyst expectations while simultaneously suffering an 18% year-over-year profit decline? What exactly drove this massive profit beat in the face of rising operating costs? Well, the answer is actually really surprising. It wasn't their flashy new AI startups that saved the quarter. No, it was a massive 1.86 trillion yen investment gain, primarily driven by their stake in the legacy chipmaker Intel. You see, SoftBank maintains a highly diversified portfolio of semiconductor bets. And in this particular quarter, those massive unrealized gains from Intel acted as a crucial financial buffer. They essentially offset the really harsh reality on the other side of the equation, which was declining startup valuations across the rest of their portfolio. Section 3. The OpenAI megabet, securing a 13% stake. SoftBank has committed a staggering $64.6 billion to OpenAI. And by doing so, they are securing approximately a 13% ownership stake in the AI pioneer. Now, locking down that kind of ownership takes immense momentum. They're doing it through 3 massive funding tranches of $10 billion each. The first one closed on April 1, 2026. The second hit on July 1. And the final $10 billion tranche is scheduled to close on October 1, 2026. Once that final check clears, SoftBank's total footprint in OpenAI scales up to a whopping $65 billion. And let me tell you, that bet is yielding astronomical returns on paper. Following a funding round in March 2026, OpenAI reached a valuation of $852 billion. Because of that sky-high valuation, SoftBank's Vision Fund recorded a $46 billion annual gain, which was almost entirely driven by that single OpenAI stake. In the January to March quarter alone, they booked nearly $20 billion in gains from it. But, and this is a big but, Contrast that with Vision Fund 2. That fund posted a sobering $5 billion investment loss in just the latest quarter alone, as their other startup bets really faltered. Which brings us to this stark reality check. 99%. In the latest quarter, the broader Vision Fund's profit plunged 99% year over year, all the way down to just 54.3 billion yen. This perfectly highlights the extreme high-risk nature of their whole strategy. Yes, OpenAI is a massive historic winner, but underneath that giant umbrella, the rest of the startup portfolio is struggling severely with declining valuations. Section 4, Physical Infrastructure, How They Are Building the Engine. SoftBank recognizes something absolutely crucial. The AI revolution requires an unprecedented amount of electricity and hardware, so they are literally building the physical engine for it. Over in France, they've announced a commitment of up to 75 billion euros for a 5-gigawatt AI data center, starting with a 1-gigawatt campus in Boswell. Over in the US, in Ohio, the renewable energy subsidiary, SB Energy, is building a massive data center where Nvidia has actually guaranteed up to $105 billion in lease payments. And OpenAI, they just signed a 20-year lease agreement, making them an 8-gigawatt customer. Just to put that into perspective for a second, 1 single gigawatt can power roughly 750,000 homes, so we're talking about city-scale electricity just for AI. And to tie it all together, on August 17, 2026, Nvidia invested $1.5 billion directly into SB Energy. They aren't just buying software, they are locking down the global power and hardware supply chain. Of course, building out gigawatts of power isn't exactly cheap. So to help maintain liquidity for these massive physical projects, SB Energy is prepping for an initial public offering. They're targeting a $5 billion to $7 billion offering as early as September 2026. This upcoming IPO is a totally crucial liquidity event because it's going to inject a ton of fresh capital right back into SoftBank's ecosystem. And we absolutely cannot talk about infrastructure without talking about SoftBank's silent powerhouse, ARM Holdings. The chip design company they took public back in 2023 is fundamentally their most important growth pillar. In Q1, ARM hit a record high revenue of $1.29 billion. For the full fiscal year 2026, revenue reached $4.92 billion. That is a 23% year-over-year jump, marking their third consecutive year of growth. Both royalty and licensing revenues are growing at a really rapid pace, sitting above 22%. ARM is without a doubt the bedrock hardware asset of SoftBank's entire portfolio. Section 5, Financing the Vision. Let's look at the debt strategy. Okay, so we've seen the scale, we've seen the megabets, we've seen the massive data centers. Now for the critical question. How exactly is SoftBank paying for this interconnected AI monopoly? The answer is debt, specifically margin loans. SoftBank is actually using its own crown jewels as collateral to fund its new ambitions. They've taken out massive margin loans against their best-performing assets. Get this. They've secured $20 billion in margin loans against their ARM holdings. In August 2026, they secured a $10 billion loan using their OpenAI stake as collateral, and they have another $7.4 billion against their SoftBank Corp holdings. They are heavily leveraging their biggest winners to finance the next frontier. But even those margin loans aren't enough. They are also pivoting aggressively to the bond market. On August 18, 2026, reports revealed SoftBank's plan to issue a 1 trillion yen corporate bond. That's about $6.26 billion US dollars. This is a 7-year term bond specifically aimed at retail investors in Japan. And here is what you really need to take away from this. This marks the largest retail bond issue in Japanese corporate history. They are raising historical levels of corporate debt directly from everyday investors to fuel their AI war chest. Section 6, House of Cards or Empire. Let's check in on the market reality. SoftBank stock tells a crazy story of extreme high-risk, high-reward volatility. Year-to-date, the share price has essentially doubled, showcasing gains of over 90% as the market totally buys into their AI vision and that staggering OpenAI valuation. But reality struck fast. Following their earnings report on the morning of August 7, 2026, shares plunged over 6% in a single session. Investors are constantly oscillating back and forth between massive optimism for the AI ecosystem and deep anxiety over that 99% drop in broader startup profits and the sheer amount of debt they've taken on to get here. And this quote beautifully summarizes everything we've talked about in the explainer today. Masayoshi-san is not making random, disconnected bets. He is executing a singular vision to completely dominate the AI ecosystem. From the underlying chip architecture with ARM, to the physical data centers with SB Energy and Nvidia, all the way up to the ultimate application layer with their $65 billion commitment to OpenAI. It is an interconnected, deeply leveraged global web. Which leaves us with this final, provocative thought. SoftBank is clearly willing to make bets that others simply won't, at a scale absolutely no one else can match. But with a highly volatile startup portfolio sitting underneath their OpenAI crown jewel and tens of billions in margin loans leveraged against their own assets, we have to ask, are we watching the brilliant foundation of an unstoppable AI empire or a fragile house of cards built on historical levels of corporate debt? Thank you so much for joining me for this explainer. Keep asking the hard questions, and I'll see you next time.